This week, we're going to be focusing in again on the US labour market, with the Fed focusing on their dual mandate now: stable prices and maximum employment. They're winning the inflation battle, so they're looking at employment data. So, in particular, we'll be looking at jobs data, and this reminded me of the ADP print that we had surprising markets earlier in the month of October. So, we're going to have a quick throwback to that high probability calendar event that we saw then, and then we're going to be looking at the data that we're focusing on this week, with once again the US labour market a keen focus of markets, and that's going to be the main focus of our trading week. Why do we look at the calendar? Because we're trying to find high conviction, high probability trading opportunities. You can see here we had 1:15 the ADP jobs data coming in above market maximum expectations, priors revised higher. That gave us a clear bias for a euro dollar sell outlook. Now, just taking a look at markets, we were clearly expecting euro dollar sellers if we saw a high print. We also had geopolitical risk giving a further boost to the dollar. So that just gave us that added conviction of a euro dollar sell. And we can see that when we had that 1:15 release, price just moved significantly lower from 1:15, and it's moved all the way down into daily support. That wouldn't be a bad target, and there's potential for a break of these daily lows and maybe even a run down to that big round number of 1.100. Now, we've obviously got Nonfarm payrolls coming up and US jobless data, but nevertheless, it does just show a good example of why we're looking at the calendar to find those high probability conviction trading opportunities where the market is very likely to move in one direction. So as we look at the coming week, let's see the top 3 events for us to be focusing on for those high probability calendar events. The first one is the Aussie CPI print. Now, the Reserve Bank of Australia moved away from explicitly considering rate hikes. However, in the minutes on October the 10th, the RBA reaffirmed that they're not ruling anything in or out. However, Governor Bullock did say in the press conference that they had not spoken about rate hike at that last meeting. Therefore, we do remain data dependent for the RBA, with inflation data highly likely to move the Australian dollar on an out of consensus print, and we can focus particularly on the core inflation print known as the trimmed mean. So the main question for the near-term Australian dollar direction is, how's the inflation battle going? Hot labour data on October the 17th means the RBA is likely to keep rates on hold for the next meeting on November the 5th. But the trim CPI print coming out this week on Wednesday the 30th of October will be key. If we see a very strong print coming in above market's expectations, then look for upside in the Aussie dollar, particularly against the New Zealand dollar. Similarly, if we see a big miss in that CPI print and we see the disinflationary process taking root firmly in Australia, like it is around most of the rest of the world, then we could see the Australian dollar sell off quite sharply. So it's one event not to miss. Another event not to miss is the US ADP data that we've got on October the 30th. The Federal Reserve, remember, have a twin mandate: stable prices and maximum employment. With inflation being largely won in the US, that battle, that means that employment data is now super important. If we start to see any slowing down in the US labour market, investors will start to price in more aggressive rate cuts, and that should result in dollar weakness. Now, we have to be careful here because the market is wanting to buy the dollar ahead of the US election, but a big surprise, big miss to the downside, then we could definitely look for some US ADP data to send the dollar lower, and that could give some of the major currencies a lift. Maybe the Aussie US dollar a strong lift if we see higher inflation data the night before. So that's one key data point to look at. And in the same vein, we want to look at the non-farm payrolls on Friday. The last non-farm payroll print we saw was a stunning print, really strong labour data. It helped reprice what the market was thinking in terms of Fed rate cuts. So, if we see either another strong print or another weak print, we could have some dollar moves, definitely if it's out of consensus. The best opportunity would be if we saw a miss in the labour data, because markets would suddenly reassess the path for US rates, and some of that dollar strength we've been seeing over the last 2 or 3 weeks could rapidly unwind. Remember, we're still bearish on the dollar from a big fundamental point of view, and the recent dollar strength has just been a bit of a pullback as part of the broader bearish narrative. So weak labour data, and then dollar bears can step in. The only thing to be aware of is the US election risk. As Trump gains on Kamala Harris in the polls, that's been lifting the dollar. So you have to bear that in mind. But we'll cover that event live and we'll be looking at it. It's definitely one not to miss. So folks, that's what really matters on the calendar this week, and I look forward to catching up with you later. And don't forget to look out for the cheat sheet as we look at the specific details of what to look for exactly and which currency pairs are most likely to move on the current session that we're looking at.